Welcome back, everyone. Today we're going to learn the most important thing you need to know as a trader: risk management, capital preservation. I'm going to make it very easy for you because the average trader that I talk to has absolutely no clue how to do this properly or doesn't do this, and then they get wrecked.
Technically, you kind of lost your money.
Like that guy. Do you want to be wrecked, or do you want to be a Chad like my boy here? You decide. After that, what we're going to look at is the market quickly, give you an overview and my predictions on where the market is going before tomorrow. So, let's jump right into this bad boy, and I'll see you guys in a second.
Fat kiddo, fat kiddo, huge fat kiddo. On a bull market. Fat kiddo, fat kiddo.
We're going to see multi-X gains again.
Welcome back, everyone. Do me a favor right now. Smash on those likes, hit that bell, subscribe. Do it right this second, right as we're about to start. Because today we're going to learn about risk management, and then we're going to do an overview of the market. Now, risk management is the most important part of trading. It's capital preservation and risk management are the two most important things, because if you don't have money, you can't trade. And if you don't preserve your money, you can't keep trading either. So learning this will be pivotal to your success long term. And I'm going to give you lots of examples today so you can really understand it in a very short amount of time. So let's get started. If you've watched in Coach's Corner, I set up trades like this. You see your stop, you see the risk to reward, and you see your target. We know all these things right from the get-go. Now, because we know this, we can use a simple spreadsheet like this one and look at how to do risk management. Risk management is not hard at all. All we need to do when it comes to risk management is figure out what is our capital. So how much money am I trading with? Let's say it's $10,000 for simple sakes. $10,000 at a 1% risk is $100. Now how to figure that out? We multiply risk by our capital. So our capital is 10,000. Decimal 01 is 1% of risk, which gives $100. If we want to use 2% risk, 10,000 times decimal 02. For simplicity's sake, and for people that are new, I always use 1%. It's a lot easier to start with, and you don't get emotional as easily as if you use 2 for some people. So this is our risk. What does risk mean, and why is it in red? Risk is in red for one simple reason, and that is because you're going to lose this capital if you hit your stop loss. Okay? The second thing to understand is what is our position size. And the way to figure that out is to go back to the chart and figure out our stop loss. Going back to the chart, we see our stop loss is 15.57%. So we're going to take 15.57 and we're going to divide that by 100 to get it into decimals. Now I know it's 0.1557, right? Now I know that. The next step, our formula is simple. We divide our risk by our stop loss to get our position sizing. 1, 2, 3. Easy enough. 100 divided by decimal 1557 equals $642. So I'm going to put $642 into this trade. Well, if I hit my stop loss, I will lose $100. Sounds pretty straightforward. It is. Next thing we look at is our risk to reward. So if I hit stop loss, I lose 100, but if I hit my target, how much do I make? Well, it's 4.15 times my loss, meaning I put right here 4.15. And to figure out how much I'll earn, I multiply my risk by my reward, RR, risk versus reward. So I know that I'll make in this trade $415 versus losing 100. It's pretty good stuff, right? That is how you do this. It's that simple. How much capital? What's the risk? What's my stop loss? Our position size, how much do I put into that trade? And then what is my risk to reward? All right, let's look at XXP. It's starting to move the way we thought, even though it almost stopped, it didn't, which is important. And now we have this reversal of the trend coming here. The question is risk to reward. We entered here and we need to know our percentage of stop loss. So we know that our stop is decimal 115. Okay. We know that our risk to reward on this trade is 4.37. So we can put that here, 4.37. How much money am I putting into this trade? We also know if we have a risk 100% reward, it's going to be $437 in there. And now we have to look at, okay, position sizing. How do we do it? Simple. 100 divided by decimal 115 equals $869.50. So we'll just say $870. So $870 is our in what we're putting into this trade. If we lose 100. If we hit our target, we get $437. That is what you need to know. That's the most important part of trading. Risk management. Figure out your risk, stop loss, position sizing, go into the position with this much capital, know that you're going to lose this, and if we hit our RR, we will get this much. That is all you need to know. Once you do that, you will be a Chad trader. You will not be this guy who's wrecked. You guys choose what works for you. Now that you guys have learned how to trade like a trader and you know what you're going to lose in every trade, you will become so much more confident and not an emotional basket case like this. Don't be that person. Let's go into the market quickly and look at the overview of it. Here we see that we're kind of ranging between the 21-day EMA and this support level at 11.34. I'm wondering if we're going to break that anytime soon. It does look kind of weak on Bitcoin, even though other parts of markets are looking more bullish. We can look also similar things with Ethereum. It looks like the 21-day EMA is holding it down. And because it's very weak in terms of dojis after dojis, I do think we're going to come back down to this $365 level. That's my prediction. The CME, it's the opposite a little bit, where it came and broke above the 21-day EMA and it's retesting it. So keep your eyes on that. If that gets really strong, that could pull Bitcoin up as well. But I'm still very much short-term bearish here. And I have reasons for that, which you guys all know. The same thing we saw with gold, we just saw with BTC on the CME. It flipped the 21-day and retested it, but it hasn't closed and it will not close for many hours, 12 more hours. Have to keep your eyes on that one as well. The DXY, it's gotten kind of bearish, which is good for crypto, but it has not reflected in Bitcoin yet, but it probably will. We see the SPX 500. It's looking like it might finally have a red day, but that, we have 12 hours. That could change very, very quickly as the US wakes up in probably about 3 hours or so. Next up, DOT is on Facemelter mission. I did take profit just above the 618. I felt that might come in correct, but I do like this one. There's a lot of support here, unlike anywhere else on the chart for DOT. SXP, it scared us a little bit. It almost stopped out. We're in 80 sats of it, and now it's doing a 3 inside up. And I'm thinking that we're going to see it do exactly what I thought it would do and move on up. And now we're in profit. So this is why we use risk management. We don't get scared. If we stop out, we lose. If we don't stop out and we let the trade play out to plan, look at what happens. It reverses and goes in profit. That's really important. Nexo has had a really, really good couple days. We entered around 11.25 and it's up 20%. 22%, and remember I said it would face melt and very likely come into this level where the Kijun is, and if it flips the Kijun, it will start going bullish again. Right now it's still technically bearish because it's underneath the cloud. It's time for face melting. Now our face melter, it's starting to wake up. We've been waiting and waiting and waiting patiently, which is what traders do. They don't force it. They wait for the opportunity to come to them. And we see that this is starting to try and push and flip this. And remember, when we flip it, we have a long way up to go. A long, long way. 290% or so. And, I think we could definitely do this to turn it into one of those ERD type situations where it's bottomed out for a year and now it's ready to actually finally wake back up. Keep your eyes on all of those. Keep your eye on Bitcoin. Remember, I'm bearish on Bitcoin short term. I do think we're going to come to this 10.65 level. We could have a bounce up first and then bounce back down, or we could range. ETH, similar story. Watch gold as well as the DXY today to see how they react, but it is very normal after a big, huge dump like we pretty much had for us to recover a little bit before we continue going back down. Not saying I'm bearish, I just think that there's certain levels that we need to come down to reset and go higher.
Bitcoin, please go to moon. Stop going sideways now.
All right, so that is your crash course on risk management. It's very important to do risk management. You must do it all the time. All right, everyone, now I need you to do me a favor. Go click on that like, subscribe, bell, leave a comment if you didn't understand anything. Please do, because I want you to be successful. No one wants to be this guy. Everyone wants to be this guy. You choose who you are, the Chad or the Rekt pleb. I think I know which one you guys would rather be. So be that person. I'm Coach K. Keep your eyes on the market. Keep your eyes on Bitcoin for that drop. If it doesn't happen soon enough, we may pump back up. But I am personally very biased and think that based off of just the chart, we are going to come down to 10.65. It may not happen today, it may not happen tomorrow, but be prepared for it. Everyone, I wish you all the best. I'm Coach K, and I'll see you guys tomorrow.
Fat middle, fat middle, huge fat middle. On a bull market, fat middle, fat middle.
We're gonna see multi-X gains.